I'm at REIT Week 2010 in Chicago, and I'm joined by Larry Gellerstedt, President and CEO of Cousins Properties. Larry, you're coming up on your one-year anniversary as the head of Cousins. What's been the biggest challenge that you faced?
The biggest challenge we faced was to fix our balance sheet. I became CEO a year ago, and we took a lot of very aggressive steps with an equity raise and some cost cutting and things to stabilize the balance sheet, and that's been the biggest challenge. We've made a lot of progress on that.
So do you feel the company is, you've got it now in a good position?
Absolutely. We've lowered the leverage from over 70% to down around 41, 42%, and we feel good about that. We look forward to taking it even lower, but I'm pleased with where we are.
And both Cousins, as well as yourself, have a background in development. Where do those things or that activity stand right now?
You know, new development is been a key part of Cousins, and that's going to be a good while off. Our models and expectations don't have any new development starting for us for the next couple of years, and we haven't started any new development since '07. So it's primarily looking after our own portfolio and concentrating on those activities, and development and construction will be a while down the road.
So with development on hold, that kind of makes me want to shift the question towards acquisitions, and I understand that that's been a big focus of Cousins' history. What do you see in the deal market right now?
You know, if you'd asked me a year ago what I thought would happen in terms of when I'd be here this year, I would have said, well, I think we'll have 2 or 3 significant acquisitions to tell you about, because they're going to be unprecedented opportunities. And in the meetings I've had thus far, I'm sitting there telling people, I think in the next 6 or 12 months, you ought to see us make some acquisitions. I think we've all been frustrated and surprised by 2 things. One is how slow the opportunities have actually come to market, and I think that's got a lot to do with the banking system and things like that. But 2, the amount of capital that's sitting on the sidelines in anticipation of those acquisitions. But it's been slower than we expected.
So you mentioned 6 to 12 months. Is that still kind of your timeline that you expect this to turn around?
Yeah, but the key part is going to be to be disciplined and patient. Is that and that's not a long suit of most of us in the real estate market, but it's going to be very, very important that you stay disciplined in your underwriting and patient for the opportunities.
And my last question is kind of a 2-parter. What is the one industry trend that has you most optimistic going forward? And then on the flip side, what's giving you the biggest reason for caution?
You know, the thing that has me most optimistic is in most of the markets we're in, we're primarily in the Sun Belt, is the way that the real estate industry is beginning to respond to the urbanization of the Sun Belt markets. Atlanta, Dallas, Austin, those markets where we do a lot, is beginning to build live, work, play communities in urban areas. To me, is a very exciting trend, and I think it's a demographically driven trend, and it'll be around long term.
And on the flip side,
in the parts of real estate that we're in, residential, retail, and office, nothing really gets better until you see consistent job growth and a confident consumer.
Great. Larry, thank you very much. For REIT.com, I'm Matt Bichard.